for having me.
Yes, and Audrey, so quick question for you. Last week,
Hmm.
we were waiting with bated breath for a decision by the Federal Reserve, a long-awaited rate cut. Um, and we were also
Hmm.
hoping to see mortgage rates follow. We didn't see that. Why? Can you explain
Hmm.
why it didn't follow in lockstep?
Yeah, definitely. I know it's one of the number one things that most people look at is the news. It makes a big stir about the Fed funds rate. So typically, if there's any federal funding and things are talked about dropping, that they assume that that's going to impact mortgage rates. When they drop that Fed funds rate, that typically is going to relate directly to things that are tied to that, which is your home equity lines of credit tied to prime. So prime is going to reduce, then also your credit cards, auto loans, things like that. So it really doesn't have a direct relation to mortgage rates. Now, what's interesting in this case is the mortgage rates actually went up after the fact, which threw everybody for a loop, but kind of not really. So most of the analysts, they had prepared us to actually lock ahead of the Fed funds reduction. And the reason why is because most of the mortgage rates, it's really going to be tied to other economic factors like inflation. They're going to be looking at the job employment report. So things like that is what's really going to impact the mortgage rates, just because most mortgage is tied to long-term treasury yields. So it's really going to be based on other factors. You will see sometimes if the Fed rate drops that mortgage rates will drop as well, but it's not every case. They're completely independent. So you have to be careful about how the news and the media makes a huge big deal about the Fed funds rate dropping. It's not going to be directly related to the mortgage